of trade. With the historic signing of the African Continental, I guess, was fired on a organization, the WTO. Trade can be and should be a win-win situation. By 2050, from 1.2 billion to almost 2.5 billion. Trade. With our shared history, African trade, this is no ordinary platform for the advancement of the AFCFTA agenda. New alliances, deals expected to be signed right here. Parallel sessions. With 100 ushers. So tweet at IATF 2018. Please tweet it so that those that are not here hear about the great stuff that is happening here. There's an app also. You should download that at the App Store or as well. And as Benedict Orama, the president of Afreximbank, said during his speech, and I'll one-stop shop. You can do deals, you can see products and services, sitting down in the comfort of your own hotel room. Website. So if you go to the IATF website, register for the virtual trade fair and be part of that. That's very important. Now, or another one related to a Tanzanian dam project for over $3 billion US. So already at $3.5 billion already. And we're going to add a little bit more now. I would like to invite to the stage a gentleman who I think there isn't anybody out there that doesn't know who he is. Coming from my home country of Nigeria. No, I'm not Egyptian, although I look Egyptian. I'm actually Nigerian. He is one of our titans of industry and also one of the most inspirational individuals when it comes to the next generation of leaders. I'm talking about Tony Elumelu, the founder and chairman of Hair. Please. His friend, Dr. Benedict Orama, one of the conveners. We've got some nice seats for you over here for the. Tell me you do, and you have them right here, so that we can. In US dollars. So please bring them to me. We don't often have you, in fact, you know, taken to calling me Mark, you've come again. So Mark has come again. Significance of this deal. Now remember where we are. We're at the first ever Intra-African trade fair. We have a vision, and the vision is to move the dial considerably on Africa trading with Africa. Afreximbank is doing tremendous work. You were starting this even before it became a cause with the Tony Elumelu Foundation and the work you did spreading your brand across Africa. Now we're signing this for 600 million.
Thank you very much. First is let me promoting trade and development of SMEs across issues we have in Africa is through industrialization, creating employment. If we don't trade intra-Africa, because we can't with an African country, what they need is refined petroleum products. What would drive intra-Africa trade? And promoting intra-African trade, therefore, means promoting small, medium-scale enterprises and capacitizing the big companies we have in Africa to be able to produce what we need to trade intra-Africa. And Dr. K. Orama, a professor in this area, and he and the Afrism, they are doing so much. And I would say we are proud beneficiaries of what Dr. Orama and Afrism are doing in African countries. We believe in developing our continent. We believe to a large extent that no one but our development project is generation in Africa. We will use this $600 million to add to the significant fund we're raising, about $2.5 billion we have just concluded in raising, to invest significantly in the energy sector in Africa, oil and gas, energy sector in Africa. We all know that access to electricity helps to create employment. Access to electricity helps to industrialize a continent. So what they are doing by supporting us is actually demonstrating that they are not just talking, but they are acting in line with why we're here in promoting intra-Africa trade. So, Dr. K, we will use this and make sure that in the long run, petroleum products and our people, of what significance is development of financial institutions to all institutions to enable them create employment, industrialize, and co. We won't let you down. Thank you so much to you and your group. We appreciate this.
Long relationship with 6 African countries and even beyond, as are not able to do so. So naturally, the UBA group became, as other businesses, of course, we're signing this $600 million, as he mentioned. The funding goes to complement for an acquisition to indigenize the ownership of resources that we need in Africa, so that foreign hands, when we have capable people who can take it over. Indigenization is not taking things by force. Indigenization is giving the opportunity for African entrepreneurs to compete effectively and take the resources of Africa, and we compete and participate in global value chains. And we are proud that the group, the Heirs Holdings, is doing that. We are also proud that there are many others who are doing the same. So today I'm really very pleased that we have the opportunity to sign this. We are very pleased that despite your busy schedules and your meetings, you found the time to come here to join us to support the Intra-African Trade Fair. So thank you very much.
So we now proceed to the official signing. Financing facility between Heirs Holdings Group and African Export-Import Bank, or as it's commonly known, Afrexim Bank. Now, Mr. Lumulu mentioned the urgent need of 25 cents per kilowatt. So it makes a difference, ladies and gentlemen. Now, as they take the table away, we'll move swiftly on to the with the program. We're going to be changing things a little bit. Notes out there. It was due to take place with 1 second. A very well-known face to anyone business, then you will know Eleni Giokas.
Thank you so very much. Thank you so much. We've now amalgamated in order to save some time, and we've got lots of topics to get through, and I'm going to give you a rundown in terms of what you run this afternoon. The first is aligning in to achieve these concrete results under the Continental Free Trade Area. I guess what's really exciting is that we've already got around 45 countries that have actually signed up to this piece of policy. This is going to happen very soon. Look, we're almost got to get business on the right track and ready to go when everyone is actually on the same page. Nigeria haven't really signed up as yet. They're looking at the details to see if it's going to suit their economy. That is going to be obviously a very big game changer. Some countries still sitting on the sidelines. So let's just discuss some of these big issues. The other big topic that we'll be looking at is you've got advanced country good infrastructure. Are these countries going to be throttling the smaller countries, perhaps, that are not as advanced in terms of the value-added sectors? Again, we're going to have a really strong set of panelists that will be able to give us their view. We also know that a lot of work has been done in terms of looking at the overall outcome. Quantifiable information has been released that we will be looking at as well, that they say it's a win-win situation. Some people don't feel that way. So I definitely think it's going to be quite a robust discussion that is coming up. I'd like Trade Policy Center at the United Nations Economic Commission for Africa. Ahmed Mansour, the Group Executive Association. Mr. Tony Alumelu from the Alumelu Foundation, and as well, we also know the chairman of A's Holdings, and the United Bank for Africa and Transcorp as well, and Africa Business Commission. Sanjeev Gupta, Executive Director, Financial Services at the Africa Finance Corporation. Emma Wade-Smith, Her Majesty's Trade Commissioner at the Vista Group. Manuel Motta, the CEO at Motta Angel Africa. And we also have Paulo Gomes, President, Constellar Holdings. Round of applause to welcome our fantastic set of panel line before we got on stage. So I think we're all ready to debate quite harshly. I'm not with you.
We were talking about sort of the win-win situation that many people are talking about, but some are saying that perhaps we haven't looked at the numbers as closely, that a continental free trade agreement, and it's interesting, we have to mention this. Globally, there's been a lot more tightening when it comes to trade. People are imposing more tariffs, protectionist.
Well, thank you, Eleni, and good afternoon to everyone here. I see a lot of well-known faces in the room. Eleni, we've done some economic modeling at the UN Economic Commission for Africa to look at the impact of this deal. And actually, what the figures tell us is that it is a win-win situation for all countries. What we are projecting is that intra-African trade can grow by at least 50%.
By 50%.
To account. What the countries have agreed is handled. You could have an impact on trade that could be up to 50%. That's what I'm saying. Then also we looked at the effect on GDP. What we found is that, again, across the board, all countries would have a positive net effect on GDP. We looked at the effect on income from revenues. That does have showing negative impacts for all countries, given that there would be some revenue loss. But the revenue loss is relatively small, a little bit. You would expect only countries that have a significant manufacturing sector to benefit. But actually what we are finding is that countries that also have up to about $60 billion a year of food, so countries that can produce food, small economies benefit, the least developed countries benefit. And that is also partly because, so to summarize, economic modeling is not precise science, but it does give you the lay of the land, so to say. It's like looking at a Google.
A company somewhere in a country that is going to lose revenue, and I think that's what people are focusing on and worried about. Association. It's interesting that Nigeria is like you, who is part of a Pan-African group that is really doing very well, but also you're representing the Manufacturing Association, where obviously they have their own set of concerns. If you're able to...
As in fact you have highlighted, the Dangote Group is probably the largest at the moment, and therefore probably more than anybody else or any party knows where the shoe pinches. Now, there's no doubt in my mind, when you look at the macro level, you're looking at the situation from 30,000 feet above, there's no question that the African Free Trade Agreement will, in the long run, be extremely valuable for Africa. However, when you look at the details as well, because, as you said, there will be losers and gainers, no doubt. And I think in a country as large as Nigeria, you really want to do a thorough assessment of the losers and the gainers, and identify what you need to do. First of all, to delay of Nigeria signing this was specifically, I think, designed to ensure that this level of assessment and evaluation is done. Yes, some of us in the Manufacturer Association did, in fact, Mr. President, accepted this view and set up a very high-level committee to that we are and almost important that we balance the losses and the gains. And I'm happy that, in fact, this is going on. In Nigeria, we've had such an inclusive engagement between the various stakeholders in addressing this issue.
I'm just curious, I mean, is there a sense that this is going to put pressure on the manufacturers in Nigeria? What is the sense you're getting right now as you're looking closer at the detail? Fantastic, but we need Nigeria.
Well, the West African market is already in existence for several years. Looks like a very good agreement, looks on a macro a very useful agreement. Our experience as manufacturers, and the Dangote Group has tried in the past few years to export products across the region. And we know the tremendous challenges and difficulties that we face in this regard. And I think it's important that if we are scaling up this to a continental level, that we look at some of these experiences and make sure that we mitigate the negative impacts that we have already experienced.
Thank you so very much.
Thank you.
Bassem, let's talk about the rest of the continent. What are the things that get ready for a drop of 90% in tariffs? I mean, do you see this as an opportunity, or do you think that you're looking at the details as well and wondering whether this is going to increase competition for you?
African work and work for everybody. In response to your question, now let's look at the current situation. When we talk about winners and losers, we're only doing 15% of our trade by going through a free zone agreement for the entire continent. I think we can only be gaining. Yes, there will be some thinking of their way of doing business with others amongst each other is based on either gasoline, gas, energy products. Very few of us are even manufacturing our needs. We're importing almost everything from overseas, from China, from the United States, from Europe, from Turkey, or wherever. So the idea that we will be losing is, in my opinion, ridiculous. In my experience with trading with Africa, with even as a private group which handles several activities, we have maybe 5 industrial units that we try to export to Africa, from energy equipment to piping, whatever product we produce, we always end up finding a new market in Africa. We just have to be ready for the long run. You have to have financing, and you have to focus on your competitive advantage for each country. Now, we're talking 55 separate. Shipping is much easier. You have smaller size countries that have private or special economic arrangements or agreements or zones they have, which make no sense, by the way. Each one of us is trying to cheat to be a member of that zone. Even 3 countries away or 4 countries associated with these currency, or just for a quick solution, a unique currency like the Europeans did, it's lots of commitment from each member. And even that, obvious that people be at the losing end of that game. So a free zone, we need to prepare. A free zone, we need to make sure that we have enough industries surviving, enough industries taking advantage of this free zone. 2, we need to dismantle these barriers that sometimes create friction between 2 African countries, but favor exchange or trade with other European or Asian countries.
That's very true. We definitely have a lot more favorable deals with other countries outside of Africa. I'm so glad you're the one that mentioned Brexit and not right now. It's completely the opposite of what we're trying to achieve, I guess, on the continent. What you're seeing with Brexit and the problems there, what you're seeing between the United States and the likes of China, trade war versus talks of possibly a trade truce, who knows. But what kind of lessons can we actually draw when we see what's happening in the rest of the world and we're trying to create a free trade environment? And it's almost like we're doing everything opposite to kind of the trends that are playing out on a global level.
Well, I think union we can do that we've been talking to governments across the African continent about. So at that point at which the UK leaves the Euro between Africa and the UK and the rest of the world. But I think one of the really important, what the overall benefits of freer trade and that is more competitive companies. We've seen, overall, free trade does bring more prosperity. It supports more companies, and I think trade, we recognise that of goods and services is across national borders. Time it takes to move products across national borders, and over the last few years, we've had tremendous success, really tangible differences that we're seeing in terms of how much it costs to move a container from Mombasa to somewhere else in East Africa, how long it takes to move a lorry full of vegetable East African community. That is the kind of stuff that will really facilitate intra-African trade, as well as, of course, that physical infrastructure piece. And I'd say one other thing, the region, is the need to be able to send money across national borders to facilitate that trade and investment.
Thank you. Sanjeev, I'm so glad that Emma was talking about the infrastructure gap. It's also fascinating when you travel a lot into the continent, you'll realize that a lot of the things on the shelves have been flown in to these countries. I mean, when I go to the DRC, I know a lot of the things that are on the shelves there have been flown in from France. Depending on where you are on the continent, it's actually easier to get things and cross-border trade. How important is infrastructure going to be, and who's going to be paying for that infrastructure?
Okay, so good perspective to the whole matter of trade. One must at least agree trade as an activity has been probably one of the most oldest activities humans have ever participated in. It's a fundamental part. Is because it serves with some element of reciprocity. Right? So when you come to talk about the African story, the trade issue, what infrastructure is going to do about it as you want, you can agree as many tariffs that he or she can afford. And if you fundamentally do not, and this is an important point in the Africa context, from Mr. Luke, the argument that overall everybody will benefit. The question is, who will benefit at which generation, right? Because the bottom line is that there are sacrifices means to an end. Quickly coming back to the issue, we are not here to build roads to look at them and say what beautiful roads these are, right? We are not going to build railroads and put carriages in structure. Till now, it's you collaborate to decide who produces the rest when you have a lot of trade.
That is a really good economies, but net, do you think it's going to be good? I almost sense that you're being a lot more kind of rate approval on this holistically. And you're saying a lot of dialogue. I mean, let's be honest here. We've been talking about intra-Africa trade for a long time. We've seen the economic communities on the continent talking, and we haven't reached a very agreement, but I'm curious about implementation. I really.
So when you talk about the dialogue producing, which for that matter, a country outside of the continent actually wants to buy. That's when trade will start happening.
Simon, what is your sense of this?
Them for this first event, which I hope there'll be many more to come in the coming year. On that point, first of all, before I answer that question, on the Nigeria question, I think everybody seems to be piggybacking on Nigeria for not signing that. It's the largest economy in Africa. There's 42 countries that have signed up. What they should do at the moment is, so rather than just to import joins. On the opportunity, on the Africa Free Trade Agreement, in my view, I think it's it's a bit premature to talk about free trade or intra-Africa trade under this mechanism, simply because there's some fundamental that has not been put in place. One of which is currency. You have 53 or 54 African countries with different currencies. You constantly have to, in fact, fund intra-Africa trade, not in Sierra Leone. And until you're able to solve the currency issue, I think we'll have a problem.
How do we do that? I mean, what do you suggest? What are you putting on the table?
Well, there's a single currency into the ECOWAS region. and he has failed. He has never gone anywhere. So far, the only currency that we hold back to the dollar and find ways to assess some fluctuation anyway. Mentioning, I think it's knowledge sharing. It's in South Africa. What's in Burkina? Buy marble from Turkey, for instance. Country import goods or material from another country outside of Africa when we know this is the most endowed continent in the world. Everything starts from here. So I think there's got to be those basic framework put in place. Currency, single currency in Africa, Africa Bank, TDB, Africa 50, AFC can fund those trade or those enabling trade environment to promote export.
Thank you, Simon. I'd like to call on my Daniel Majila, the former CEO of the Public Investment Corporation of South Africa. Thank you very much, gentlemen, for joining us on the conversation. Let's now move on. Okay, and thank you, Simon, for those examples of how we can sort that issue. Yes.
Please let's make sure we understand one thing. We're not against trading with China, Turkey, Europe, and the US. We just want to increase the continent. We would like a good portion of that stay in Africa. But trading with the UK, with Europe, with China, with Turkey is good for everybody and will continue. We just want to make sure that this...
Because we're starting from a low base of 15% intra-Africa trade. Europe is at 67% and growing. So,
gentlemen are positioning your company at this point in time, and are there any specific things that you're looking at change?
So we are an infrastructure company. So we are involved on the type of infrastructure of about $48 billion in Africa, and that is
just closer, please.
That is an important factor in trade. I understand some people believe that infrastructure mentioned about this specifically, but I have an example of an African country which spent $300 million developing facilities and eggs, because when we look at infrastructure, many of the countries, in my opinion, there is structure for trading between countries. And this comes to many of the issues. We operate in 16 countries and we have to move things around. I give you an example, Zambia to Rwanda, the best way and the most economic way, and where it is possible to have to challenge the currency issues, is to go from Lusaka to Beira in Mozambique, from Beira by boat to Mombasa, and then from Mombasa to Kigali. This is free because of infrastructure, border, tariffs. You have to take you efficiently, and many of the roads or many of the bridges doesn't exist between...
If we remove these, it's going to be fantastic. Well, Emmanuel, which is interesting. So, Paolo, what are your thoughts?
I think design after the colonial period, or during the colonial period, make things very complicated for us. There's a level of legacy that we are dealing with. But I think that will not worry me, because we have several good news. The reason why we are here today. We have now a vision. I think we have agreed, we want to be at a certain stage of our prosperity. And we have agreed that in the next 10 years, we'll focus on a couple of important initiatives. And one of the initiatives is precisely the Continental Trade Agreement. That's the good news. We haven't agreed for a long time about something very particular. Secondly, we have data. I think our friend from the ECA has clearly, why do we need the momentum? I think this is where we have also to thank the African Exim Bank, is that the African Exim Bank is keeping the momentum. Why do we need the momentum? Because we have urgency. This thing of trade is not just because we want to play and go for conferences. We have urgency. We need to create jobs for our people in the next 10 years. And we know that trade is key. So now's the issue, the risk, tariff. We are good. If we at least we do trade on things we eat to be sold among ourselves, you will see many small and medium enterprises to get into that business. And believe me, they don't care about the currency risk. They care much to upgrade Portugal in terms of infrastructure, East and West Germany. I don't see the European Union putting all this money for Africa to upgrade. They didn't finish very well. The issue for us is to look at partners who want to get with us to upgrade our infrastructure And certainly that infrastructure will help in terms of trade. But let's focus on things that we are good. Let's try on agriculture at least to start exchanging among ourselves, and then the rest will come quite quickly.
Thank you. Admasu, welcome, sir. Thank you for joining us. So many things to touch on here. I think the first, one at a time. And our products in, something perhaps would be coming through from the port of Mombasa.
That's very clear is the cost of trade is still just too high. Whether it's cross-border trade or trade with the rest of the world, we are just not very competitive, which is why the continent has been pushing this infrastructure issue for quite some time. So infrastructure has been a very high priority issue for the past 15 years, very far from the destination where we need to be. So clearly it's been mentioned by many today. I think the truth, if you really want to get a sense of my honest feel about the issue of trade in Africa, whether it's intra-Africa trade or trading with the rest of the world, we all know it's infrastructure, it's industrial policy, it's getting the institutions, whether it's the free trade agreements. In the end, it's about execution. The Lagos Plan of Action was 38 years ago. With all due honesty, just about everything we've been discussing, maybe with the exception of global value chains, has been discussed 38 years ago. The UN Economic Commission for Africa on the panel will tell you they've written paper after paper. I've been following those papers. I honestly think that we're great at setting the right strategy, but we have a type.
What does government need to do to align what it's...
Any CEO here today, how do you get things done? It's all about incentives and consequences, right? You set an objective, you set a strategy. If you can't get it right, you have to deal with the incentives, both the upside and the downside. So in the final analysis, I really think we're mature communities, cross-border issues, monitoring them, also very much about organization, about and making sure that the talent can do what needs to be done.
Can I comment on that?
Ahmed,
that's where
it is involved. Yes, sir.
I think this is a very important issue that unfortunately has often been kind of overlooked. I think execution at the servants here, so if what I say is a bit, makes you a little unhappy, please I apologize. But frankly, the capacity, aptitude, regulators and the executors of public policy is the strategist. But unless these are executed effectively and competently, we will continue to suffer. Nothing wrong if you look at the echoes down when you get to the bottom of an oversight of those policies. So what we need at every national level must do something about reform of the civil service machinery, about enhancing the capacity of the civil service machinery, about aligning the aptitude and attitude of the machinery with government policies. Until this is done, we'll continue very poor execution.
And very good points. I think, Daniel, I just want to get Daniel involved here quickly. Governments there in Rwanda, and now you're going to the country that perhaps is going to be cheaper than what you're offering to ensure that they remain competitive.
Well, I'm not an expert on policy, unfortunately. I play in the investment arena as an asset manager looking for opportunities so that we can grow funds for our clients so that they are able to meet the liabilities of their members when they are due.
But
that is pension funds.
You want to operate in a certain environment, don't you? Don't you want to be operating in that certain environment where you have clarity?
Yes, I'm getting there. As investors, we would like to invest in assets that are going to generate good returns for us, risk-adjusted returns. One of the funds that we manage is the Government Employees Pension Fund out of South Africa, which has made an allocation $1 billion that needs to be invested. We are at almost 1% at the moment of what we should be invested in. And we are encouraged by the leadership that we are seeing in the African Union in the form of Africa, 2063 agenda. It creates a nice a framework for countries to be able to collaborate, work together in the partnership. Importantly, we're seeing companies or Exim Bank as a leader in this. I think they're providing good leadership of how these are the sort of partnerships that we want to put money with alongside. Remember, you need economic growth for assets to grow. And if you have a significant asset base, you will be able to influence the economy by investing in those sectors that are going to catalyze economic growth. Now, if you look at pension funds in Africa, I'm not sure how many are really investing aggressively in the continent. We think we are providing a good example, a good leadership as the Public Investment Corporation, the company that I used to work for, that we should be investing more in the continent. Our pensions should be putting more money in the continent in partners such as the Afri-Exim Bank, African Development Bank, and so on, in order to drive this vision of the African Union 2063. Risk-adjusted returns that are sustained. We are busy in the process.
What are you targeting in terms of size?
Come again?
What are you targeting in terms of portfolio size?
Currently, we have an allocation, and the ticket size, really, we have to spread it across the continent. We've segmented it into 5. You know, Nigeria is alone, 20% East, 20% West, SADC 20%, and Central 20%. The rate at which we are going to invest this will depend on how well we understand the risks and the partnerships that we have to be able to monitor our investments properly.
Thank you so very much. I know if a lot of you want to get involved in the debate, so we've got a few. Yes, sir. Bassem, yes.
One milestone in Africa's sort of renaissance, which is this treaty or this agreement. And I also heard about what you said about countries and governance, the art of execution and what have you, which can only boost the whole process of transformation. The point that I would still like to make is that why there is between the nations is because the fact still remains that 5% of Africa's exports are still primary goods, which makes it by far one of the largest prime. It's not going to change. Global multinationals, global production chains, my view, till there is collective bargaining, till there is an agenda to say, you talk about primary goods, we are price takers. I mean, Tony was mentioning earlier on about Coke basically earns what, less than 10% of it? Another little beautiful, and the fellow who probably plucks the tomato then gets into a rickety boat to try and get. So there has to be that mindset change that there is 1 billion people in a region, I'm afraid.
I agree with a lot of what Rajiv has said. The way you're going to have that change is to grow the markets, to consolidate the market, to make it interesting for investors to come into the African market. And the way you do that is not through your 55 small fragmented. Nigeria is 0.8% of the EU 28. South Africa is 0.7% of the EU 28. You can do all the bargaining you want. What you need to do is you need to consolidate. Much of what I've heard really is expecting trade to do miracles, which trade is not supposed to do. You know, trade cannot cure the problem. It's, you know, it's a limited area. Trade does highlight these other problems. The AFCFTA also put in place what they call the Boosting Intra-African Trade Action Plan. And that action plan has 7 clusters, which includes infrastructure, productive capacity, etc., which countries need to deal with. The business environment, logistics, do the miracles which it is not supposed to do. And if I could make 1%, about almost 60% of it is actually processed goods. So I don't agree that, you know, it's that low. Because what we find from the data is about, you know, about 60% of processed goods, whether it is, you know, your basic food stuff which has been dried or whatever you know, it has been, but you know, it has been transformed. Value has been added, about 60% of that. And what we need to do is, again, what trade policy can do, it can remove the barriers, the higher tariffs that we have on this continent, the non-tariff barriers, which by the way includes your the problems you have at customs, from corruption to inefficiencies at customs, problems with trade facilitation, etc. So that is what we do, but there are several other things that need to be done. And my very last point, actually, I listening to the points that were made about Brexit. I think Brexit actually proves why we need trade integration, because the UK, as all economists have said, will take a big hit by trying to disintegrate and out of trade. It is a question of sovereignty. There are issues relating to sovereignty, to the way the EU is structured, which, by the way, is not what this AFCFTA is about. It's not about having a superstructure in Africa. It's just simply a simple trade deal. So I think it's a very different issue. But overall, let's not try to make trade...
A point to draw on, we tend not to be so great. And I think dialogue is absolutely at the heart of how we execute this well and as quickly as possible. Government and industry to understand what is it that companies are finding really frustrating about regulations and policy that is inhibiting the flow of trade and investment across national borders. And that strong leadership then to just drive that change forward and to do that not necessarily waiting to do it all at a continental level or enable companies to do what they are looking to do. And one word that I haven't heard yet on the panel today is around entrepreneurs. And I think Africa's entrepreneurs are not waiting for the CFTA to have agricultural produce to market, and how you create those, support that, and provide an enabling environment.
It's really interesting, but also there's been it's a lot.
This issue of engagement, whether you call it dialogue, but I think engagement between the public sector and the private sector at the individual country level is extremely important. I think you need to engage in order to share trade with country. At the end of the day, there are two sets of Siamese twins. On the one hand, there's infrastructure and finance, trade and investment. Now, these create a virtuous circle, and our concern today is that despite that investment, trading is not happening as much as it should. So if we can boost trade along the lines, investment, infrastructure will follow. And when there is infrastructure, it's looking for infrastructure, it's looking for investment, it's looking for trade opportunities. Thank you.
It's a very good point as well. About a continent where we've got big powers that are trying to get a piece of the growth pie, that are trying to trade with the continents as much as possible. So it's only natural that we should actually take opportunity and obviously capitalize intra-Africa trade. Who are you talking? What is exciting possibilities of increasing intra-Africa trade, and which sectors are going to truly capitalize on this, do you think?
We are looking at sectors that have high social impact, sectors that have ability to stimulate economic growth and job, about agriculture in particular, along the value chain. And we want to partner with those that are playing across the full value chain as far as possible with the right technology. We're looking at social infrastructure, in particular affordable housing, which we believe is a very fast job creator, for that matter, and stimulate economic growth quite significant that Africa needs so much, but will have the effect of financial services, driving financial inclusion. Trade will be much easier if we get the right platform, the right technology, so that it can connect the traders quite easily. And then lastly, infrastructure. Infrastructure will take long, as has been said, but it's abilities in the future.
And we keep talking about the value-added sector and beneficiation. How much effort and money needs to be pumped into the value-added side?
To capture the opportunities along the global value chain, I think where there are strong resource endowments, for instance, cotton as an example, there's a lot more effort to develop the textile industries that will then develop into the clothing and apparel industries. We're seeing signs of that in a number of countries. So it's really about resource-based industrialization, which actually creates the opportunity to actually around where we can resource endowments. Oil and gas is an example. We've heard about what's happening at natural gas across borders and do it much more efficiently at a much better cost than trucking it across. So I think resource-based endowments are a very good place to start, to actually look at where to focus some of that value addition.
Thank you so much. I'd love to get an idea of the net from the private sector if you are involved in the private sector. And importantly, we would also like to start with you, Daniel. I'm just going to stay at the end there and then we can move down.
I'll keep it short and sweet. I think and it's more about putting together plans to execute. Investors like ourselves are ready to put money in countries where governments are showing robust plans of how they are going to implement SDGs. And most importantly, we're looking at companies that are also contributing towards attainment of sustainable development goals, which of course in Africa we talk about the Agenda 2063. You know, that is what we're looking for in building a portfolio that's going to make an impact.
Thank you. Atmaso.
Just to highlight that trade is a very powerful engine of growth. We know that. We need much more of it, but let's remember it is a dependent variable.
What our brothers say about execution, and I think each country, what they can start thinking about is participation into the trade, the Africa Trade Agreement. And each country has a small comparative advantage. I was talking about the example of my own country. I'm from Guinea-Bissau. We produce seafood, quite good one. Instead of thinking about selling it to Germany, if we start at least thinking how we're going to sell our seafood to Nigeria, which is next to us, is just a step because issue as a priority to move the agenda toward the trade agreement.
That's really interesting. I'm just going to ask you on this. You're obviously exporting to the likes of Germany, but you're looking at foreign exchange earnings as well. If you're sending to Nigeria, you're going to be earning naira, you're going to be earning dollars.
Again, when you look at the small traders in our countries, they don't. Again, you have to find things that you could sell, and I believe that food is something that we're going to continue to need as far as West Africa and Central Africa is concerned. If we are not...
I think it's the fundamental part is that if you want to do trade in large scale, you cannot exchange Malawian kwashas for Zambian kwashas. And even if you go for large countries where you cannot change Nigerian nairas for Egyptian pounds, or Nairobian shilling, Kenyan shillings for Ugandan shillings and Rwanda francs, you will never be able to trade between the countries because you will always
trading with each other. So why is it the issue of the currency an obstacle?
In the year, this works even for infrastructure, because when you say you need $50 billion, you don't need $50 billion. You need $50 billion or 1 trillion kwashas or 500 million nairas, because it's very simple. For you to build infrastructure, you need cement, which comes from limestone and water. It exists in the continent. You need asphalt for the road, comes from bitumen, which comes from oil products and from which is a refined product. You don't need, other than the machines, nothing else to build the road. So you don't have potatoes, chickens, beef with 50% tax, then between two countries 20,000 kilometers apart with no taxes.
Thank you.
As I mentioned, with 3 different currencies, you cannot hold Gambia dollars in Guinea. You cannot hold Sierra Leone franc in Gambia. But I also do agree with everyone here that talk about, I mean, perhaps there should be to fund the infrastructure gap of 63 to and years ago. We'll be talking about the same thing in the next 40 years. So to be concrete, we need to look more toward and the investors together to figure out how they can fund the infrastructure gap to boost trade.
Thank you.
The legislation itself, or the agreement itself, is an important first step. But trade, as we can all safely agree, is the ultimate measurement of a region or a country's well-being. And to do that, as my fellow panelists said, there has to be an element of industrialization, there has to be a dialogue, and run away from that. One little point I'll make on the agreement itself, because I kind of cast my eye over it, and I think there's some good stuff there. But what it doesn't have yet is the ability by the African Union or whoever the regulatory authority is to be able to censure countries which do not intentions.
Emma.
I think that the continental free trade area is and in increasing the amount of growth and potential sitting within markets. And the UK government, as a global champion of free trade, is working with governments across this region to help with understanding how to do that with policy changes, regulatory changes, capacity building, technical assistance. So I think that those kinds of partnerships are really...
The European Union happened overnight. Started an idea in 90 common market. Now, we're just talking about the African Union. We'll keep talking about 15% are hindering the development of intra-trade between... Listen to my colleagues here about... Yes, we've been talking about free trade agreements or developing trade in Africa for the last 30 years, except that when I visited Africa for the first time of my life in 1991, and when I visit Africa today, there's a huge difference. In 1991, we're talking about almost 90% of the regimes are dictators. We're talking about an Africa that's deep in debt, even for its own food. Today, Africa is moving, Africa is changing. We have more responsible governments, we have more and more transparency and better governance. We're not there yet. Let's not kid ourselves. Much more aware today of...
I believe that if our aptitude of indeed, if we do that, probably half of the so-called influence to follow the formula processes. So really, working on the machinery, execution machinery, to me is number one. And that is the quickest win, because you could do it with so little effort and in short sort of time. The second, and I said this very seriously, that creating a platform for African private sector. So I was really pleased when I saw African Manufacturers Association, and I need to bring the private sector actors together to engage each other, because that's how trade happens.
Thank you. David, last words, sir,
yes,
to you.
Last word. No, I think one of the questions you asked, Eleni, is whether trade can bring about economic transformation on the continent, and in particular this trade deal. I think the answer is to take away one thing from this debate. It is that this deal is about scale and scope. It's about economies of scale and scope, because you need to have that consolidation of the market to grow the companies. Dangote is a beneficiary of this. Dangote would not be Dangote if he was only operating in one market. Ethiopian Airlines would be going to bring the investment into tomatoes, into cocoa, into transforming these products if there is a market for it. And actually, if you read the protocol on the settlement of disputes, this deal has teeth, because countries that don't behave themselves will lose their benefits under the deal. So for the first time, Africa is putting something on the table that would disable that protocol on the settlement of disputes.
Thank you so very much. Thank you so very much to Noon, and for your incredible insights. And I think it's a fantastic way for us to take important things in mind. Thank you very much for joining us. I think this is the last panel of the day. I'm going to be handing over to Juggle.
Yes.
Eleni Giocas, and thank you to your mega panel. Fantastic. Ladies and gentlemen, give them another round of applause. That's really good. As Eleni says, we have come to the penultimate finale of what's been quite a historic day. The first day of the I told you that $25 billion US dollars of deals will be signed. We've seen over, by my calculation now, Mr. V. Srivatsan, who is the Managing Director and CEO of OLAM for the Africa and Middle East. Give him a round of applause, please. Frexim Bank. So two of you, please come and join me at the table here. Legal people with the documents. Yes, there they are, standing by. I think if I sit you here, sir, perhaps this will be a nice place for you to sit. Mrs. Kanaya Owani, you can sit here. Excellent, marvelous. So what are we doing here? Well, we are signing developed industrial parks, and OLAM are the sponsors of the Gabon Special Economic Zone, and they'll be signing this document now between bank. Now, this purpose is to provide a framework for the collaboration by both parties to establish they are Chad, Côte d'Ivoire, provide detailed analysis. Now, that has been signed And could I allow, yes, shake hands, very good. Congratulations on that. Give them a round of applause. Thank you very much. Olam and Afrexim Bank there signing a memorandum of understanding. Now we have come to the end of the first day. I want to say thank you, everyone. Let's be back here bright and early. You'll see from your program there are a number of events and all that. Also check out the exhibition. There are over 1,000 course of the next 5 or 6 days. So thank you very much. Good evening. I'll see you again tomorrow.